Hey everyone, welcome back to Corporate Lens, where we decode big business moves in a simple and smart way. Today we are diving into a rising star in India's EV world, Ather Energy. From launching India's first smart scooter to going public this year, Ather has built a bold narrative. But is it sustainable? Let's find out.
So, where did it all begin? Ather was founded in 2013 by two IIT Madras graduates, Tarun Mehta and Swapnil Jain, with a simple vision: build an electric scooter that was not boring or slow. The business model is vertically integrated, meaning they design, manufacture, and sell everything in house, from the battery packs to the operating system on their smart dashboard. They also operate Ethergrid, their own fast charging network across 80 plus cities, solving the biggest EV pain point: range anxiety. Plus, they are not chasing the cheapest ride. Instead, they focus on tech savvy urban riders who want performance, premium design, and connected features. Now let's talk numbers. Ather's revenue has grown from just 86 crore rupees in FY21 to over 1800 crore rupees in FY23. That's 20 times in just 2 years. But the net loss, a whooping 864 crore rupees in FY23 and even higher at 1059 crores in FY24. So, yes, they are growing fast, but burning cash even faster. Why? Because scaling hardware, building and charging infrastructure, and customer support is capital intensive. Ather went public on May 6, 2025, raising 2,981 crore rupees, about $652 million. The IPO was modestly subscribed and the stock listed with a small premium but ended the day 6.5% below the issue price. Investors were wary of losses, intense EV competition, and high valuation. However, Ather plans to use the IPO proceeds to build a third factory in Maharashtra, expand Ather Grid, and invest in R&D and marketing. The real test is whether they can turn profitable now that they are answerable to public investors. Let's zoom out and do a quick SWOT analysis, which stands for strengths, weaknesses, opportunities, and threats. So the strengths are tech-driven product, in-house software, battery design, and loyal urban user base. The weaknesses are premium pricing, operational losses, and limited mass appeal, while some of the opportunities are expanding to tier 2 cities, entering family scooter segments, and high export potential to Southeast Asia and Africa. Threats? Well, they are price wars with Ola, subsidy cuts, and rising competition from legacy auto giants. So, in short, Ather is smart, but it's riding through a tricky road. All right, now let's bring in PESTEL. PESTEL is a tool business used to analyze the broader environment they operate in. And PESTEL stands for political, economic, social, technological, environmental, and legal factors. Here is how it breaks down for India's EV two wheeler space. So, the political factors playing are big subsidies like FAME second and EV friendly state policies. Economic factors are rising petrol prices help, but EVs are still cost more upfront. Social factors are young, urban riders love clean tech and smart rides. Technological aspects could be like EV tech is advancing fast, batteries, dashboards, and charging systems. Environmental factors could be like EVs are becoming a part of India's clean energy push. Legal factors are compliance on battery safety, emissions, and subsidy eligibility, which is crucial. So, while the tailwinds are strong, one policy shift could change the game overnight. How does Ather stack up against rivals? Ola Electric, well, it's cheaper, high volume, but plagued by quality and service issues. TVS iQube, another competitor, which is solid build, legacy trust, but it is slower on innovation. Bajaj Chetak, stylish and reliable, but priced like Ether with fewer features. Hero Vida, backed by Hero Motocorp, but late entry into the party and limited presence. Ather wins on tech, but struggles with cost competitiveness. Ather is trying to bridge a major gap in the Indian market. offering a premium, reliable EV with strong service and software. So, where is Ather headed? In 2024, they launched the Ather Rizza, a family scooter targeting a broader customer base and a smart move. They are also expanding their charging grid, improving affordability through finance options and targeting tier 2 and tier 3 cities. But EVs are not just about vehicles, they're about infrastructure, ecosystem, and user trust. So, can Ether go mass market without losing its brand edge? Can they remain premium and still reach the masses? Well, that depends on two things: bringing down costs through scale and getting to break even before the funding dries up.
Ather Energy is one of India's most exciting EV startups with bold ideas, cutting edge products, and now public accountability. But in the end, success won't just depend on the great scooters, it will come down to unit economics, execution, and customer love. So, is Ather going to become India's Tesla, or is the road only going to get bumpier? Do let me know your thoughts in the comments below. If you like this breakdown, then hit like button and subscribe and stay tuned for more case studies right here on Corporate Lens. Thanks for watching.